Recording in progress.
Good morning. Calling the LACERA Committee to order. Today is June 24th, 9 a.m. meeting, and we will start with the Pledge of Allegiance.
Right hand over your heart, ready, begin. Pledge of allegiance to the flag of the United States of America and to the republic which it stands.
Okay, thank you.
So we'll go ahead and do the roll call. This meeting is being held virtually and in person, so I will do a roll call of all the trustees to confirm attendance. Ms. Fessler, Trustee Fessler?
Present.
Okay. We're not here. Trustee Langton?
Present.
Okay. Trustee Fay? Okay. Trustee Martin?
Yes, here.
Okay. Trustee Me will be participating under LACERA's teleconference SB 707 due to a medical condition. Trustee Me, can you publicly disclose whether any other individuals 18 or older of age are present in the room with you?
Nobody else present in the room.
Thank you. And then Trustee Gismer.
Here.
Okay. Trustees, please use your raise your hand Zoom option to be placed in the queue. At this time, we ask that all meeting participants to mute their mics until you are ready to speak. And now we may proceed with the agenda.
Thank you. Approval of the minutes. Do I have a motion to move?
I'll second.
Okay. No public comment? So we'll move on. Oh, yeah.
So it was the motion made by Ms. Langton and second by Fessler.
No.
Ginsburg. Okay, thank you. So Ms. Fessler?
Yes.
Ms. Langton?
Aye.
Okay. Ms. Me?
Yes.
Ms. Ginsburg?
Yes.
And Chair Martin?
Yes.
The motion passes unanimously.
Okay, moving on to 6A, non-consent items, internal audit, external quality assessment, and we're going to turn it over to Ms. Collins. Thank you.
Actually, it's myself and Council Chua for this discussion. Okay, so good morning, Chair Martin. Sure this is on. Yep. Good morning, Chair Martin and trustees. I'm recommending an external quality assessment of Internal Audit Division, our EQA. So for this presentation, we'll provide an overview of the EQA process and highlight some of the key points. Next slide, Nate, please. Just waiting for the next slide. Okay, great. So let's start out with the purpose of an EQA. It provides an independent review of the Internal Audit Division. And this is one of the mandates under the Institute of Internal Auditors standards. So you may recall we've had discussion in the past regarding those professional standards. Those are our guiding principles. So the EQA is performed on a 5-year cycle by an independent assessor. And overall, they're reviewing our compliance with the standards and also professional and best practices. Simple way to think about it is that the auditors are going to be audited. The independent assessor will review our audit functions and operations to determine if we are adhering to professional standards, and also if there's any areas where enhancements can be made, like opportunities for improvements. So just like the audits that we provide and we perform, there will be a report that will be provided to the LACERA Committee. This report will provide the results of our review. Now there's 4 ratings that they use for this. And one of them is actually new because the standards were updated in 2025, January 2025. So the 4 ratings are full achievement, which is the highest rating, and that's the newest rating. It means like you get the gold star. You are exceptional. You have an exceptional internal audit department. And then there's general conformance, which is the top rating that was done when we had this EQA done in 2022. There's partial conformance and then non-achievement. This basically means that you fail. So the report will document the results of the assessment, and if we're meeting those expectations. And then there's also recommendations that will be included to strengthen and enhance the audit function. Provided with my memo is a copy of that 2022 EQA that was performed. That can be used as a good reference of the audit report or the type of report that you will receive. And then the bottom line and the value to the ACRE committee is that an EQA answers the question: is internal audit doing its job the way the profession requires? Can you rely on the information and the reports that we are providing to you? So let me unpack what an EQA covers. Next slide, please. So listed here are the key areas of the assessment. First and most important is a comprehensive review of the internal audit operations in conformance with the IAA standards. Included with your memo is the IAA standards, the updated standards as of January 2025. If you had a chance to go through over 100 pages of the listing, you can see it's very extensive. That's the benchmark that we will be rated against. The EQA also includes a review of our risk-based audit plan. There's an agenda item further down the meeting where I'll discuss the planning process for the fiscal year 2027 audit plan I'll be bringing to you in August. So this review will also look at the methodology, our process, the way that we are reporting our audit plan to the ACRE committee as well. And they also validate that the plan that we are providing to you is risk-driven. Another significant area of the EQA is a review of our audits and the audit reports that we provide to you. They will select a sample of the audits that we have conducted since our last EQA. It's a very thorough review. They're checking off and making sure that the way that we are documenting our audits, the reports that we are providing to you are in compliance with those standards. Most importantly for the ACRE committee is that this confirms that the reports reaching the committee are dependable enough to base oversight decisions on. Okay. And then lastly, a couple other areas. They're looking at the competency of the internal audit division as well. Do we need additional training? Are there areas where we're lacking and so forth? And then they make recommendations on any areas of improvement for us. They also do a lot of interviews at every level. They have stakeholder interviews from the ACRE committee. They interview individuals in the executive office, management. They also interview the internal audit staff. And that way they're able to get a perception of the value that internal audit is providing, where we're on mark, and then also where we're missing the mark as well. So overall, it's not just like a spot check, but a very comprehensive review that is conducted. Next slide. So who performs the review is just as important. Some of the key points relating to the independent assessor is that they should be independent of LACERA and its governance structure, no conflict of interest. They should have a deep knowledge and understanding of IAA standards. If you note in the EQA report from 2022, it was performed by the Institute of Internal Auditors Quality Services section. So they're the primary experts on the standards. That's the caliber of the assessors that we're looking for. They should also have extensive skill and understanding of internal auditing, functions and operations. Since we are a public agency, we should have an assessor with public sector expertise. They should also have experience conducting EQAs. That's also important. And then one of the changes with the EQA brought about by the standards as of 2025 is that if it's only one assessor or if it's a team of assessors, the one person on that team needs to have a certified internal auditor designation. So for full details of the EQA, you can refer to the statement of work that was provided in the green folder that does have the most current and updated criteria. So at this point, I'm going to turn over the discussion to Alex Ochoa, who's one of our auditors, and he's going to be the project manager over this project.
Thank you, Alicia. So with the ACRE committee approval, we will be using the established RFP process to select the independent assessor for this EQA. As Alicia mentioned, I will be the project manager overseeing the RFP process. Similar to the past, an evaluation team composed of the internal audit staff, the executive team, will review proposals and will select a consultant that will be recommended to the ACRE committee for approval. For the 2022 EQA, the audit committee at the time also recommended one member from the committee to participate on the evaluation team. We also recommend to have at least one member or our ACRE committee consultant on this evaluation team. Next slide, please. As you can see here, we have a very aggressive timeline. We want to get this up and running as soon as possible. We want to have this available to you to report at the November ACRE committee meeting. We expect the evaluation team to review proposals in late July to early August and recommend an EQA assessor at the August ACRE committee meeting. Next slide, please.
And I just want to add one more point. I mentioned earlier in my discussion that this is EQA is typically done on a 5-year cycle. I am recommending it a little bit earlier. One of the best practices is to have an EQA when there are significant changes within an organization, which is what happened at LACERA. We have a new CEO. We've had some senior management retire. So there is some turnover in management. And then also you have a new chief audit executive, myself. And so it is a good time to have a review done earlier rather than later. One of the things I'll be discussing later on are some enhancements and changes I would like to make for internal audit. And I feel that having an EQA done earlier will provide me with some additional feedback on those areas where we can make some improvements just to elevate internal audit. So I see this as a great value, not only to the ACRE committee, but also to internal audit, because we'll have fresh eyes on what we're doing and we'll have the expert giving us advice on what changes we should be making.
Okay, Alicia and Alex, thank you very much. I think this is a very important audit to do. And I don't think we do it enough. I think it's great that you here at LACERA have adopted this. I think there's going to be a couple of challenges. I think it's the right time to do it, but also there's been new standards we talked about that only came into place last year. So being able to come up to speed on those standards is going to be a challenge, but I still think that it's a great thing to do. But just be aware that, you know, that challenge, and to management as well, that that's there for the auditor. And also we talked a little bit about, and if the board agrees, that our person to sit on the panel would be the consultant, Larry. If anybody has any questions or comments about that. Okay.
Hi, Chair. Chair Martin, this is Nicole.
Yes. Yeah, go ahead.
Hi, good morning, everyone. Thank you for presentation, and I second that. It sounds like a really important thing to do. Glad that we've been proactive on this item. My suggestion is just an idea, Chair Martin. I'm thinking this is also a good learning opportunity for trustee, you know, to be participating in this, right? A lot of us is new to boards, new to audit committees. I think it's a valuable learning opportunity to maybe have both, you know, our consultant and one trustee to participate in this process, so we can like have more takeaway from it besides the getting the job done, also learning for trustee. So it's just a recommendation. Myself doesn't have capacity, but I would, you know, recommend like whoever like to do this. You know, audit is really important function, you know, in this organization. So yeah, it's just a thought. And then I have one more question after this.
Comments on that? adding a trustee.
I think that's a good idea. Yeah, I don't care either way, but I think that it certainly doesn't hurt anything.
Agree. And now, who would that trustee be? I guess we should ask that. Thank you. Okay, there we go.
Awesome. So one more question is that as I was reading the package, right, I see the report from 2022. This have been a lot of improvement opportunities were identified in 2022 report. I think, like to make this exercise even more meaningful, right? I want to follow up on the status of those, improvement opportunity. Where are we at? Like, are they like complete or still working on them? Like any update?
Yes, as far as the recommendations from the 2022 report, when we received the report, we did begin implementing those recommendations. Internally, we do track the completion of them. The majority have been completed. There were some that were not completed due to just the way that we conduct our internal audit operations. And unfortunately, I think the last reporting was done sometime last year on the status of the EQA recommendations. And we also include them in the performance summary report that we provide to the ACRE committee at the end of the fiscal year. So we'll have another update at the August meeting. And one of the areas that they do look at when a new EQA is done is the status of those prior recommendations. And so there aren't any that were high risk that were not implemented. There are more changes in operations though.
Perfect. That's what I was looking forward to hear. Any items that we did complete, we pick it up from this assessment, right? Make sure we don't let them, leak behind. That's all I have. Thank you, Chair Martin.
Any more questions or motion to move? Go ahead.
Yes, thank you. First of all, Ms. Collins, I think this is very courageous of you to do this, particularly, given the fact that the new standards were just implemented and the detail of the documentation documentation requirements are more detailed now. And so, but just to kind of, how does this help the committee a little bit is one of the new requirements also is that rather than the chief auditor giving the report to the committee, is actually the assessor is required to deliver that report and to share their views. And I think that that's very helpful. Along with that, though, will you be preparing an action plan, if you will, like if there are any comments, and keep the committee, let them know how you're going to address the items, typically like a response to an audit almost. If you'll be doing that and then providing periodic reports to the committee on the progress of it. And so,
yeah, definitely there will be a response to any of the recommendations provided to us, as well as action plans on implementation. And we'll also include, similar to our audit reports, target dates to have these any of the recommendations and the action plans implemented. And then we will provide updates to the ACRE committee at meetings. I won't just wait till the end of the fiscal year to provide that. I'll provide them at each of the meetings. So then there's full transparency and the ACRE is aware of the progress that we're making on those recommendations.
good. I think the timing on this is perfect for you and in helping with a path forward if there's any items that need to be addressed. So I don't expect an answer right now, but I'd like to ask though, later in the item, you have your agenda plan, your audit plan.
Mm-hmm.
This is new. It wasn't in the prior year plan. It wasn't in the plan for this year. Mm-hmm. So if you could just explain when you get to that item, how does that impact your current plan? Mm-hmm. Because this is a lot of work that you're asking for staff to be involved with and to do. And if there's any impacts to the plan, just let the committee know that when you get to that agenda item.
Yeah, okay. and there is some impact to it.
Yeah.
And I will discuss that.
Thank you.
Thank you.
I'd just like to make a motion that we authorize the issuance of the RFP and designate Mr. Jensen and Trustee Langton as two representatives on the panel.
The motion made by trustee Fessler and second by trustee Ginsburg. Trustee Fessler,
Yes.
trustee Langton,
Aye.
trustee Me,
Yes.
trustee Ginsburg, and Chair Martin.
Yes.
The motion passes unanimously.
Okay, thank you. So next up, we have public disclosure forms audit.
Okay, all right. Good morning, Madam Chair and trustees. It is a great pleasure to be speaking in front of you again, and for some of you for the very first time. We will be presenting the public disclosure forms audit. The audit was performed by myself and my colleague, Alex Ochoa. In this presentation, we'll be covering the following: the engagement summary, the objectives, the key findings and recommendations, along with the overall audit rating. At the end, we will open up the floor for questions. However, throughout the presentation, if you need any clarification or you have any questions, please feel free to stop us. So with that, next slide, please. So the divisions involved here were the legal office and the financial and accounting services division, or FASD. This was an assurance engagement. An assurance engagement is an engagement to provide an assessment of governance, risk management, and control processes. The audit rating is opportunities for improvement. I'm aware that for some, this is the first time in the AGR committee. So I will provide more additional detail on the risk rating and the overall audit rating and explanation of what those are respectively when we go through the presentation. So now I will hand over the presentation over to Alex to go over the next slide.
Thank you, Dale. Now, the public disclosure forms, such as Form 700, 801, and 806, are regulated by the Fair Political Practice Commission, otherwise known as the FPPC. I will provide a short description of each of these forms. For Form 700, these are filed by trustees and designated LACERA employees to disclose their personal financial interests, such as any investments or real estate income and gifts, so the public can confirm those interests do not improperly influence their official decisions. Form 700s are publicly accessible upon request. Form 801 is used when a third party, in other words, not LACERA, pays for something that benefits the agency. These is most commonly used for travel for official business. Instead of being treated as a personal gift to the official, the payment is publicly reported as a benefit to LACERA. Form 801 is published on our website quarterly. And then there's Form 806, which discloses paid positions that board members vote to appoint themselves or other officials to. Along with the compensation involved, this form is posted also to our LACERA website when they are completed. In short, the Forms 700, 801, and 806 are FPPC transparency disclosures. Together, they help the public see that LACERA's decisions are made in the fund's best interest, not for personal gain. Additionally, we also review the compliance with the revolving door rule. This rule applies to LACERA employees leaving LACERA to not participate in any non-governmental employment that affects LACERA, such as no lobbying activities in any compensation capacities. Depending on the position, this ranges from 1 to 2 years. Overall, the purpose of this engagement was to ascertain compliance with FPPC regulations and internal policies and procedures, and most importantly, to assess controls around the process. The objective was to determine whether LACERA's FPPC disclosure forms process is timely, complete, accurate, transparent, enforced, and compliant with FPPC regulations and related internal policies. Such of these policies are the travel policy and the conflict of interest code. For the scope of this engagement, we reviewed forms filed between January 1st, 2023 through July 31st of 2025. Next slide, please.
Okay, so we have 3 risk levels for each finding depending on the severity, pervasiveness, and impact. These metrics help us determine if the finding is rated as low, medium, or high. If you'd like to see what these different ratings are, please refer to page 196 of the PDF for Appendix 2, which is Findings, Risk Rating Scales. And as you can see on the slide, we have 2 medium risk ratings. So a medium risk satisfies one or more of these criteria: a moderate financial impact, partial internal controls, inconsistent compliance, and potential reputational exposure. These are risks that are relatively important, but not necessarily urgent, nor detrimental to LACERA. With that said, I will go into detail about what led to these recommendations and a little bit more detail about each of these findings. So for finding number 1, we have enhancements to Form 801 documentation and monitoring process. If you'd like to follow along, please refer to page 191 through 194 of the PDF for the details of these findings. It includes the observations, the risks, and the recommendation. And pages 197 and 198 of the PDF for the audit dashboard. Now, the audit dashboard summarizes all the objectives, their associated test of controls, and whether a finding was noted for that objective. As you can see, if you take a look at the dashboard, there were no concerns noted for Forms 700 and 806, nor for the revolving door rule. Now, I'd like to emphasize something. Our findings and recommendations do not allege any regulatory or compliance violations. They are focused on strengthening the processes and internal controls surrounding the public disclosure forms. This is audit's responsibility in adding value to LACERA. There was also nothing noted that indicated improper or red flag behavior from officials or staff. So finding number 1 has to do with objective number 4 with accuracy of information. And this has to do particularly with the process improvements for Form 801. And that had to do with unclear payment flows. Now, ultimately, this finding has to do with cross-divisional coordination between legal and FASD. So supporting documentation should clearly demonstrate that all of this information is included. Now, this is not an all-inclusive list. It is up to management's decisions on what to include additionally to this, but at minimum, this should be included to make things supportable and traceable. And these come as pre-approval and allowable exceptions. So a pre-approval memo should be needed. Payment routing, who paid what? Was it the third party, LACERA? Detailed supporting records. This includes receipts, schedules, and post-trip reconciliation, invoicing, AR entries, or proof of payment. And I believe that post-trip reconciliation is where legal and FASD come together to confirm that the third-party funds were actually received by LACERA and not the individual traveler. That validation is critical to support that the classification as a Form 801 or payment to agency, and to ensure that reported amounts are accurate, traceable, and fully supported. I'd like to emphasize also that the issue is less about one document and more about the overall documentation not always being complete enough to support that 801 treatment from end to end. Additionally, there are procedures in place with legal, FASD, and along with the travel policy. So the main gap here is coordination. Okay, so those are already formalized. So it's just a fact of matter of coordination with this. And so our recommendation was that, and management has agreed to it, and we'll address it by September 30th of 2026. Any questions on finding number 1?
I have a couple questions.
Of course.
The first one, how often is 801 implicated?
So that depends on, so it's technically for official business. So it varies among each quarter. Through the audit period, it averaged about 2 travelers per quarter.
Okay, and
Yeah.
Can you give me an example of when an outside agency would have covered these expenses to have a LACERA representative attend?
Yeah, so for example, with sometimes with investment staff, they're invited to certain conferences for education purposes and things of that nature. So they invite them, and then LACERA fronts the payment. And then from that, the third party will have to reimburse LACERA. And in that case, LACERA needs to issue some sort of invoice to that third party and get that recovered. And so that's where part of the gap falls in, where the invoicing sometimes is missing. And so we want to make sure that that invoice is always retained. But we have Steve here too.
If I could, Chair Martin, would like
Yes.
to add to that information.
I think you need to turn your mic on.
Yeah, so when investments and legal negotiate investment contracts, we negotiate strong ownership rights as much as we can. One of those ownership rights is participation in the Limited Partnership Advisory Committee on funds. And as part of that ownership right, we negotiate that the cost of participating in meetings, attending meetings of those advisory committees is going to be paid by the fund, since it benefits the fund, not just LACERA. And these expenses that were audited here and that are really the only Form 801 expenses that we've had to date are from that source.
Okay, that makes sense. And thank you. I guess I'm a little confused. If LACERA is fronting the expenses, I mean, the purpose of this is to make sure that there's not some sneaky workaround, right? Where an individual is really getting a freebie from someone on the outside that they wouldn't be permitted to accept, right?
Precisely.
When LACERA is fronting the expenses to begin with, how is 801 even implicated? What am I missing here? Because it's not like I, as a trustee, am getting that somebody's paying me to go to the Bahamas, and legitimately it would otherwise be LACERA's expense. Here, LACERA is paying for it up front. So we've made an internal decision that it is an appropriate business function for the individual to travel to the event. And I will say up front, this 801 thing is new from after my involvement in this world many years ago. So I don't know the particulars of it, but it wouldn't seem to me that the whole concept is even in play if the agency is making the initial payment. It would make more sense to me if the outside vendor, or whoever it is, the outside party, was paying for the trip, and then after the fact, this paperwork needed to be in advance. I get all that, but when LACERA is sending somebody on our own dime, I'm not sure where the flaw is in this process, or if 801 even would apply then.
Steve, maybe.
Yeah, I can address that. The scenarios arise in two situations. Sometimes the manager will arrange to pay the costs, and that's an 801 situation because they provide a benefit to us that we haven't that we need to report under 801. Sometimes we incur the cost and then obtain reimbursement.
Right.
And then because we're obtaining reimbursement from the fund, we're receiving a payment from the fund and need to report it from the investment manager and need to report it on Form 801.
Okay, and so 801 does go that far if the agency is paid in advance. I mean, I understand that it's the same bottom line, same end result, but what this whole concept is trying to make sure is documented properly and isn't a sneaky backdoor way of getting somebody a vacation that they'd otherwise have to own up to or couldn't accept because of the gift limitations. If we're paying up front, I'm confused as to why it even qualifies as an event that would come within this process.
Because we are receiving reimbursement and therefore a benefit, and in effect, we're not paying for it because we get reimbursement from the manager. So we're receiving an economic benefit that needs to be accounted for.
We
either
are, but the
way.
individual isn't. And I guess that's my point, that I would assume, I mean, the FPPC doesn't care what benefit LACERA gets. They're trying to control what happens with individuals who might be self-dealing or otherwise getting inappropriate influence from the outside on the performance of their professional and public responsibilities. So, and if we're getting paid under a contract, I don't even know if again, I'm kind of spitballing here, but if the payments are coming to us under a contract, I question whether 801, there's no reason not to, I guess, but it just seems to me that if that's one of the areas that we found is weak, I don't know if it's even an area we need to be measuring.
Yeah, under the FPPC regulations, these payments would otherwise be gifts to individuals, but they're not treated as gifts to individuals because they're paid pursuant to a contract, and therefore they're deemed as payments to the agency, which are reported on Form 801. And that's so that the regulations are complex, and they go through this exercise of changing establishing that it's not a gift to the individual, it's a payment to the agency, which is then disclosed to publicly show how the payments were made as a payment to the agency.
Okay, I'll look at the reg. It sounds to me like it's probably FPPC overreach maybe, and that wouldn't be the first time that I've been exposed to that kind of activity on their behalf. But
we don't believe we're over disclosing.
No, I understand that. I mean, at their end, that they are overreaching. Right? If we're getting paid under a contract, that is the consideration for the contract, and that to me that's very different than a situation where like Dell explained, where there's an opportunity to attend a conference, an educational conference of some sort, and one of our people has been invited to attend at the expense of someone else. That's a one-off, that's a standalone situation. But when we write into our contract a specific requirement or opportunity that we'll have a representative directly involved in this part of the contract at the expense of the contractor, that's part of the consideration in the contract. And to me, those aren't the same situation. I don't see any downside to reporting that, but I wonder if we need, to my mind, those shouldn't be the same. And that doesn't mean that the law isn't treating them the same way. I appreciate what you're saying, and I'm not familiar with what the regs require, but they do seem to me to be qualitatively different circumstances that deserve to be treated differently or characterized differently.
We comply with the regulatory scheme as it exists.
Yeah.
The FPPC has historically, and this is true in many scenarios, very concerned about payment of travel expenses. And so I think the history of this probably is rooted in that concern by the FPPC about payment of travel expenses to individuals.
Right. Okay. Thank you.
Any further questions? Oh,
Can I just, Madam Chair, just provide a little bit of insight into maybe just to connect the dots, which is the Form 801 travel, because it all involves the investment division, is not to go to conferences. It's not for boondoggles. We don't do that. This is to avoid double paying management fees. If we negotiate in a contract that we're going to serve on an advisory committee, the general partner does that for all investors, such that if we pay ourselves, in effect, we're double paying. The missing part of the discussion is that for the vast 95+% of the travel in the investment division, the traveler fronts all the expenses. So LACERA doesn't front the money. It's the individual that's putting up the money.
And so the individual is the one that receives the payment? Or does the payment come to LACERA and then LACERA reimburses the individual?
The latter.
Okay.
That's very, very good. Thank you for that. Appreciate it. Any further questions? Do we have a motion?
Were you finished?
Oh, no,
Oh,
no.
I'm sorry.
Yeah. So now finding number 2.
I think there's a big question mark up here.
So finding number 2 has to do with developing a formalized training program for public disclosure forms. So what was noted during these instances was that training and awareness exists during the audit period, along with prior presentations and ongoing support from legal. However, the process had not yet been formalized into a structured program. Also, the audit identified gaps in cadence, role-based training, and attendance tracking, and documentary refreshers when requirements change. And so our recommendation is intended to strengthen the sustainability and accountability by moving from periodic or reactive efforts to a formalized, repeatable control. And so our recommendation is just to address those gaps that I just mentioned, which is to define a schedule and required participation of individuals, role-based curriculum aligned with fiduciary duties, centralized tracking and documentation, and along with periodic updates when major changes occur. And so management has agreed to these recommendations and will address them by December 31st, 2026. Any questions on that finding?
I'm sorry, I have another question.
Go.
Isn't there some mandatory training that the FPPC requires? I remember sitting, when I first got on the board, sitting through a 1 or 2 hour Zoom kind of thing that I had to complete.
This is, the FPPC does offer training. It's not mandatory. This is a subject that was addressed at the BOR offsite in terms of establishing broad training for trustees and staff on issues like this, and FPPC issues are among those that were included in the training that were discussed at the offsite. So LACERA is, because we're not a special district, we're not subject to the ethics training, the other types, various other types of trainings that are required under the government code. We think LACERA should comply as a matter of best practice with those, and that was what was explained at the offsite, and that we're going to be presenting to the JOGC in the near future to kind of fill that gap and meet this audit finding as well. We, at the beginning, at the entrance meeting for this audit, we self-disclosed this issue of training because Allison and I and others have been very sensitive to this issue of not having a regular cadence, as Dell said, and otherwise covering the subject matters that should be covered with trustees and staff.
Okay.
So we appreciate the confirmation of that is in the report, and we do in the course of our ethics code of ethical conduct training, which will be completed by December 31st. We will also be covering these issues, and that training will be provided to trustees and staff.
So this will be a component of a broader training that we're offering.
It'll be a module, you might say, or a component of the broader training.
Okay, great. All right, thank you.
Any other questions?
Any questions? Any motion to accept and file?
I have a couple more.
One more.
Yeah, I have a couple more. Yeah. So
Okay.
almost there. As always, the audit was performed in accordance with the Institute of Internal Auditors standards, which includes independence, objectivity, due diligence, and professional skepticism. Please refer to page 195 of the PDF for the audit ratings, which we have 3 audit rating levels from highest to lowest: satisfactory, opportunities for improvement, and unsatisfactory. This audit was given an opportunities for improvement, which is usually issued when improvements or issues are noted, but are not detrimental nor critical to meeting the operational goals or needs of the division or the process itself. Legal as a process owner, and although they demonstrate a very strong control environment with effective oversight and the capacity to achieve their divisional objectives, but because of the medium rated findings that were noted, and opportunities for improvement was assigned to this audit. Next slide, please. And as always, I want to thank legal and FASI for their help and cooperation throughout this audit. And particular thanks to Ms. Jessica Rivas. She was very patient and very detailed when it came to this audit especially in describing these very complex regulatory guidance for these forms. So again, I'd like to thank your, and I'm very happy to take any additional questions or comments.
Can I say motion now? I do want to say excellent. I think this is an excellent audit, very difficult. Learned a lot, very good information today. Thank you. So do we have a motion to accept and file?
I'll second.
Okay,
Trustee Ginsburg made the motion. Trustee Fessler, second. Trustee Fessler,
Yes.
Trustee Langton,
yes.
Trustee Me,
Yes.
Trustee Ginsburg,
Yes.
and Chair Mark.
Yes.
And the motion passes unanimously.
Okay, so we're going to take an item out of order, which is 6F, fiscal year 2026, 25-26 internal controls over financial reporting readiness assessment.
Morning. Just
And
waiting for the
Christine.
slides to be up before I start. All right. Good morning, Chair Martin and members of the committee. So before I begin, a couple of housekeeping items. Brittany Smith, the engagement manager from CLA, who performed this assessment, is joining remotely today and is available to answer any questions regarding the assessment. And secondly, I'd like to mention that my presentation slides might look a little bit different from the rest of the team. We're currently going through a quality assurance and improvement program, and part of that effort involves updating how we present our audit results and materials to key stakeholders, such as the LACERA Committee. So this presentation reflects some of those changes, and I welcome any feedback or suggestions you may have. So now onto the presentation. Next slide, please. So I'm here to provide an overview of the fiscal year 25-26 ICFR readiness assessment conducted by CLA in advance of this year's financial statement audit. As you'll hear throughout the presentation, the assessment was intentionally incorporated into the transition to our new auditor and provided management with an opportunity to evaluate significant audit readiness material before the audit began, rather than during the audit itself. So this was an advisory engagement focused on audit readiness. What this means that this engagement was not designed to provide assurance over internal controls or reach conclusions regarding the effectiveness of internal controls. One point I would like to mention here is that LACERA did not perform a readiness assessment of this nature during prior auditor transitions. However, based on those prior experiences, we believe that this new approach will enhance audit preparedness and position both management and the new auditor for a more efficient first-year audit. Additionally, the assessment helped establish an understanding of LACERA's financial reporting environment and identify 3 audit readiness matters that warranted management action. And finally, management has already taken action on 1 matter and is actively evaluating the remaining matters. Next slide, please. So what is the purpose of this engagement? We wanted to perform the readiness assessment to strengthen audit preparedness and facilitate a smooth first year. The engagement also supports the committee's oversight responsibility to financial reporting under the LACERA Charter. And finally, the assessment provided management with an opportunity to proactively address any matters identified, thus reducing audit risk and supporting reliable financial reporting. Next slide, please. So one thing I found particularly valuable about this engagement is that it gives CLA an opportunity to get under the hood before beginning their first audit of LACERA. As part of the transition, CLA spent several months with management across different divisions, reviewing key processes and documentation, and developing an understanding of how financial reporting works across the organization. The goal here wasn't to perform the audit early. The goal was to identify significant audit readiness matters while there was still time for management to take action before year end. Next slide, please. So the assessment focused on whether key financial reporting processes and supporting documentation were on track to be ready for the upcoming audit. CLA reviewed 8 significant financial reporting and operational areas, including actuary and census data, contributions, investments, financial reporting, and IT general controls. Next slide, please. So you ask, what came out of all this? So CLA identified 3 matters that they believe were important enough to bring to management's attention. Now, again, these matters are not audit findings, control deficiencies, or conclusions regarding the effectiveness internal control. Rather, they were elevated because they could affect the fiscal year 25-26 financial statement audit if they were not appropriately evaluated before year end. The value of the assessment is that management received this feedback before year end, providing time to evaluate and address the matters as appropriate. Next slide, please. So here is a table summarizing the 3 audit matter findings. So the first one relates to the employer contribution process. If you think about it, employer contributions are one of the primary funding sources for any pension system. So it's not surprising that CLA spent time understanding how employer contributions are received, reconciled, and tracked. Their recommendation was really centered on further formalizing roles, responsibilities, reconciliations, and discrepancy resolution process. Management is currently reviewing opportunities to further strengthen and document the process. The second matter relates to third-party service provider oversight. Because LACERA relies on State Street for key services that support financial reporting, CLA wanted to understand how management oversees the controls that State Street performs on LACERA's behalf. CLA identified opportunity to strengthen oversight of State Street's SOC reports. Since the assessment was completed, management has reviewed the SOC reports from State Street and completed this item. And the last and third matter relates to financial statement presentation reporting. So this matter is a little bit different from the first 2. Rather than identifying a process-related observation, CLA provided suggestions regarding the presentation and classification of certain financial statement line item. Again, management is currently evaluating these suggestions and will determine whether any reporting modifications or process enhancements are appropriate as part of the financial statement preparation. So overall, 1 matter has been completed and the remaining 2 continue to be evaluated by management. So in closing, I think the biggest takeaway from this engagement is that it achieved exactly what it was intended to do. First, it provided CLA with an opportunity to gain an understanding of LACERA's financial environment before beginning their first-year audit. And secondly, it provided management with an opportunity to evaluate significant audit readiness areas before year end. We believe this readiness assessment approach has strengthened audit preparedness and supports the upcoming financial statement audit. Thank you, and I'd be happy to take any questions.
I have a question.
Yes.
First of all, this is great. These pre-assessments are amazing. Couple questions. I hesitate to accept and file because I'd like to know what we decided or what happened with number 1 and number 3.
Okay.
So I would just like a report back at some point when those are completed. Just interested in knowing that.
Yes. So part of what we're currently right now doing, internal audit, is working with management to monitor and track the progress. So I will report on the status of the outstanding matters.
Would that would these though end up just in a regular report with all the outstanding recommendations at some point for audit? Nothing like that?
Audit recommendations, we haven't put in that.
Right.
Yeah, but I think for when we're reporting out the financial statement results, or even at the next ACRE meeting, once management has made a decision, we can report on it as part of our record follow-up or
that would be perfect.
Yeah.
I don't want to make any extra work. Thank you.
Okay. Did you have any other questions, Chair Martin?
I don't. Do I have a motion to, we're going to go ahead and file, right? Accept and file. Yeah.
Yeah, I'll move that.
Thank you.
Second?
Okay.
Motion made by trustee Fessler, second by trustee Langton. Trustee Fessler?
Yes.
Okay. Trustee Langton?
Yes.
Trustee Me?
Yes.
Trustee Ginsburg?
Yes.
And Chair Martin.
Yes.
The motion passes to accept and file.
Okay. Thank you, Christina. Okay, so we're gonna go back to 6C. Gabrielle, and it just is Gabrielle Tafoya. So it's LA County's compliance with requirements for retired rehirees. Rehired retirees. I correct myself in June 30th, 2025.
Good morning, Chair Martin and trustees. I will be presenting the results of our audit titled Los Angeles County's Compliance with the Requirements for Rehired Retirees for the fiscal year ended June 30th, 2025. The audit was completed as part of LACERA Internal Audit's annual audit plan and focuses on compliance with key statutory and regulatory requirements governing rehired retirees. Next slide, please. This was an assurance audit engagement conducted over the Legal Office and Benefits Division. Our overall audit rating remains opportunities for improvement, which is consistent with the prior year. This indicates that while controls are in place, there are areas where compliance and monitoring can be strengthened. As a reminder, the insurance engagements provide an independent assessment of governance, risk management, and control processes. Our work is intended to support management and the ACRE Committee in overseeing risk and compliance. Overall, the repeated rating signals ongoing compliance challenges, particularly related to statutory requirements outside of LACERA's direct control, but still impacting system compliance. Next slide, please. We conduct this audit annually because non-compliance with rehired retiree requirements can have significant consequences that include violations of state law, including CERL and PEPRA, and potential risk to LACERA's qualified tax deferred status under federal IRS rules. This makes compliance in this area both a legal and financial risk priority. The objectives of this audit were to determine compliance with the following key requirements. Number one, the CERL 960-hour limit, in which retirees may not exceed 960 hours worked in a fiscal year. Number two, the IRS bona fide separation requirement, in which there must be a legitimate separation from service prior to rehire. Number three, the PEPRA 180-day break in service requirement, in which a mandatory waiting period is required before returning to work with limited exceptions. Number four, the PEPRA limited duration requirement, in which reemployment must be temporary in nature. And number five, the PPG 505 waiver form requirements, with new updates effective as of October 16th, 2024. I want to point out that the county has taken additional measures to strengthen its controls in managing rehired retirees. The county's Department of Human Resources partnered with the county chief partnered with the county's chief executive office, and in consultation with LACERA, revised the county-wide policies, procedures, and guidelines, the PPG 505, titled Appointment of Retirees to a 120-day Temporary Assignment. PPG 505 became effective on October 16th, 2024, and further refines the requirements of rehired retirees as authorized by PEPRA. Notable revisions to this policy include providing a process for annual renewal by the county CEO, adding clarifying language, contacts, and links throughout the policy, and adding a PPG 505 waiver form. The purpose of the waiver form is to confirm that the employee understands, acknowledges, and agrees to the conditions required by the county for rehire. For the scope of the audit, we analyzed payroll data provided by the auditor controller, of which the population included 466 rehired retirees who worked during fiscal year 2025. Testing focused on compliance with the objective requirements listed above. Our approach included data analysis, document review, and compliance testing. Next slide, please. First, I want to point out that for this year, there were no individuals that exceeded the 960-hour limit, and that there continues to be a decline in the number of rehired retirees surpassing the 960-hour limit compared to previous years. Internal Audit believes this decline is due to the proactive initiatives undertaken by LACERA management and staff in conjunction with the ongoing partnership with the county CEO's office. In addition, we have very good controls in place in which we monitor and notify rehired retirees as they approach the 960-hour limit. Finding number 1 relates to ongoing noncompliance with the requirement that rehired retiree employment be temporary and limited in nature. Our audit identified instances where retirees remained employed for extended periods of time that may not align with the intent of the law. This issue has been repeated from prior audits, indicating a systematic challenge. Management agrees with the finding and recommendation and will continue to engage with the county CEO's office, the Department of Human Resources, and County Council to address compliance with the limited duration requirement and whether existing policies and practices can be updated or clarified to address this requirement. Management also discussed this matter with the Board of Retirement and the Operations Oversight Committee in 2025 to ensure board awareness of the unresolved compliance risk. Additionally, management suggested that future audits will include review of departmental justification documentation to better understand extensions. Finding number 2 relates to inconsistencies in implementing the updated PPG 505 waiver form requirements, in which the new updates were effective as of October 16th, 2024. As part of our testing in this area, from our population of 466 rehired retirees in 2025 fiscal year, we identified 92 rehired retirees who started working on or after October 16th, 2024, and were therefore subject to the updated PPG 505 waiver form requirements. We tested whether the required waiver forms were signed by the retiree and the human resources manager, and then submitted to LACERA's advanced payroll unit. We found that LACERA did not receive 72 out of the 92 waiver forms as required by the policy. So as a result, our audit identified gaps in documentation completeness and monitoring and tracking processes. Next slide. So I want to thank the benefits and the legal division for their support during this audit, and I and management is available for questions that you may have.
I'll start with Amy. Yeah. And then Bobby.
Good morning. What happens when the limits are passed, the hour limits?
Okay, so when a 960-hour, when an individual, we haven't had any, for this year's testing, we haven't had any, but in the past, that individual is notified that they surpassed the 960 hours, and they would have to submit that money back to LACERA.
So it's considered voluntary after you surpass a certain number of hours?
960 hours is the limit, is the threshold per the policy. And once that is passed, then that individual would have to pay that money back. If there's a significant amount of money that, yes, that is paid back at some point in time.
And then what happens with the non-compliant rehired retirees? Is that a different item than the 960-hour limit, or is that the same thing? Separate? So what happens when someone is non-compliant rehired retiree? Can you just explain that a little more?
When an individual is a rehired retiree is non-compliant, for example, the policy is not signed, that would be one instance of non-compliance.
Got it.
Then at some point during the review of the policy by the CEO, the county CEO office, they would have to ensure that that policy gets signed at some point after the fact, so that to ensure that that individual, that rehired retiree, understands the what they're required to do as part of a rehired retiree process.
Okay, Got it. Thank you.
Can I clarify? Thank you, Chair Martin. I think it's important to understand the statutory framework under PEPRA and to some extent SERL. So the provision of PEPRA that relates to rehired retirees relates to the eligibility for employment. So it's really directed to the employer, which in this case is the county. It's not directed towards LACERA. The provision does provide that a rehired retiree is only eligible may only continue to receive their pension if there's compliance with the statute. But the statute is silent on any burdens and responsibilities on LACERA. We're concerned about this because we don't want retirees to be receiving benefits from us that they're not eligible to receive under the statute. And that's why internal audit has historically done these annual audits, both for the county program and for the LACERA rehired retiree program. So there are two requirements that we're talking about and that you just asked about, Trustee Langton. One is the 960-hour limit, and the other is the limited duration requirement. To fill this gap of no remedy being established in the statute, I believe it was last year, might have been 2024, there was an amendment to SERL that addressed what happened if the 960-hour limit was exceeded, and it provides that there can be recruitment from the plan sponsor, because the plan sponsor is responsible for overseeing its employees and making sure that they're hiring rehired retirees in compliance with PEPRA's limits. So it filled that gap. It did not fill the gap on limited duration. So currently there's no defined remedy for violation of the limited duration requirement, and that creates difficulties for us because we have some discomfort with the risk that the county's practices, particularly in hiring 100 people as based on the audit results between 10 years or more of service, that kind of just on its face seems to create issues with respect to compliance with limited duration. But we have no ability. We can audit that. SERL allows us to audit that. Internal audit is auditing it, but all we can do is report those findings currently. Because SERL allows us to conduct this type of audit, there are ways of addressing the documentation gaps that Gabriel talked about. We do need to get the justification form so that we can so that we can really truly audit whether there's compliance with the limited duration requirement. We're not saying that per se. Because of the lack of definition of limited duration in the statute, we can't say that per se somebody who's been rehired for 10 years is a violation of the statute. We can say that we don't think that it comports with legislative intent and just plain language, but we can't really. The best way we can support a review of that and a better analysis is if we get the justification forms. So it's important in future years that we get those justification forms. I'm happy to answer any questions about the statutory framework and our statutory ability to audit.
Yeah, through Chair Martin, and again, I appreciate Steve's comments. Also, just additional text language on that limited duration. It specifically talks about the emergent need and also the concept of specific skills and knowledge transfer. So to Steve's point, I think for us, and we have done over the last 2 to 3 years, and Gabe mentioned this, made progress with the county in really showing up and having some controls, and they've made inroads with the 960. The limited duration, just like we did internally at LACERA. If you look at 5 years ago, LACERA had an issue with rehired retirees, and we've created a policy, and now we're in compliance both on the 960 and created a specific carve out to really define limited duration. And I think ultimately that's going to be the key with us in collaborating with the plan sponsor, the county, is how do we work with them collaboratively for them to define limited duration, because it's really unique to their workforce. And so if we can get a collaborative approach with them to really kind of outline a policy that they can adhere to, similar to what we did, that's ultimately the goal as well, over and above what Steve just mentioned.
I have, thank you. Whoops, hold on a second here. Sorry about that. I have a lot of angst over this. I mean, this was an ongoing issue for people in my old office when I worked there. I mean, you've got folks that have been retired, like you say, for 10 or 12 or 15 years that still come back and do their same job. They do it for fewer hours. They're not doing it full time because they're limited to the 120 days, 960 hours. But I'm concerned, and I understand what you're saying, that there's nothing in the law that specifically gives us tools to, well, I thought I turned that off, sorry. Nothing in the law that gives us tools to actually do any enforcement per se, and yet we're exposed, right? I mean, the memo indicates that our status as our qualified tax deferred status could be in jeopardy here. And so we're sort of like a victim with no defense. And that's a scary thing. And I at the same time, I know there's a lot of delicate dancing that LACERA does with the county. We've got other issues with them and need their cooperation in circumstances. So we can't come in with guns blazing to shoot up the other side in an all-out war. Having said all that, it seems to me, and I'm very grateful that you've come up with a way of addressing the 960-hour issue. I think that you had a tool there, and you took advantage of that authority to strengthen the oversight and the opportunity to put us in a more defensible position. But something has to be done. We can't, I don't see how LACERA can continue to participate in a process where there's a requirement that it needs to be due to an exigent or emergency situation and or a specialized talent. If you've got an emergency, that's one thing. I mean, if they can't recruit enough deputy sheriffs and they need to still keep the peace on the streets, I get it. But if I've got a special skill and I'm still there 15 years later because of my special skill, somebody should have figured out how to the first 10 hours of my next year should have been spent training somebody else on my special skills. So that's just a meaningless, after a certain period of time, that is a meaningless standard that is clearly it's due to either laziness or a comfort level or somebody being in good with the HR people and they're allowed to come back. And that's clearly inconsistent with what the law has in mind. I think we have to be a little more forceful than we've been and point out, if we haven't, to the county that this is jeopardizing our qualified status. It may put various, and maybe we can do a little research, it may jeopardize various qualifications and standards that the county has available to it that would otherwise be in jeopardy if they're consistently violating the law. And maybe we should be a little more aggressive. We've got this notice that goes out to these rehired folks that we send out saying, hey, be careful, you're not allowed to work more than 960 hours or something to that effect, right? That's one of the ways. Maybe we should put something in there that also says, and the law says that this is of a limited duration and your eligibility to work post-retirement is limited to addressing an emergency situation or because you have a special skill that has not yet been otherwise developed in your department or something to that effect. Put the people on notice because they're being jeopardized too. They're at risk here if it is subsequently determined that their employment in year 13 after retirement wasn't legit. Maybe they're going to wind up owing back money. I'm really concerned that if this information becomes, if there's a slow news day, and there don't seem to be any of those recently, so maybe we're safe. But if there's a slow news day and this gets out, this is the kind of thing that the unions could latch onto. They'd much rather have new union members than retirees filling positions that that could be and should be staffed by new blood. It's a blatant. It's a blatant failure. I won't say it's a violation. It's a failure to comply with not only the letter of the law, but definitely the spirit of the law. And to protect LACERA, I think we've got to be a little more assertive than it appears that we've been. We were assertive on the 960, and that seems to have led to some good results. But we clearly have a problem when over 25% or nearly 25% of the people performing these services have been doing so for 10 to 15 years. That can't be, it's a meaningless requirement to say it's of limited duration when you're still doing it 10 or 15 years later. So I'd like to see us become more assertive. And I'd also hope that we've been very diligent in documenting with the county our concerns and our and the risks that those concerns pose, because I worked for the county for a long time. And when stuff hits the fan, their immediate reaction is to look for someone else to either to blame, to shift blame to, or to bring in as an additional target. And we need to make sure that we're in a position of justifying what we've done in an effort to make this, to ameliorate this situation. So I recognize you've got handcuffs on or whatever, and that makes this really a problem. You've got a responsibility and no way of fulfilling it, which is nowhere to be in any situation, let alone in the law. But we've got to do more than just annually count noses and generate a report, because eventually that's going to catch up with us, in my view.
We have tried to engage the county on this issue. They invited us into the room in the development of PPG 505. We raised these issues of the 960 hours, of the limited duration, of establishing processes and definitions that go to give some meaning to the statutory language so that it fits with the county's needs. They do have flexibility there because there is no statutory definition. They did improve the policy, as Gabe noted, with the addition of an annual CEO review and approval of all of these individuals, all 466 of them. They did not take our advice on doing something like LACERA does, or their own solution to defining limited duration. They did not take that step, and it would be helpful, I think, for them, for members, and for LACERA, all three, to do that. I think it starts really with getting the documentation, because as Chair Martin mentioned, I think you're recognizing too, Trustee Fuster, there may be some of these long-term rehired retirees where there is a legitimate case to be made, and a portion of them are with the Sheriff's Department. Most of the long-term are with the Sheriff's Department. There are other heavy, DA is a heavy user, the Children and Family Services is a heavy user. There are some others, but if we get the justification forms, if we get the documentation, then we really can do an assessment and also engage the county in dialogue on this issue about the justifications. I think that's really where it starts. that's my suggestion, is to really push on getting the documentation and having dialogue.
I agree with you entirely. The problem is you still have no, if they put together a justification and it's facially specious or super thin, or it's the same justification they've used for this person for the last 6 years, then what do you do? Then now you know you've got a document that proves that they're not really living up to the spirit of the law, but you still can't do anything about it. And so I think in some ways there is, and even though this is inconsistent with what I said a few minutes ago about getting more documents, in some ways ignorance is bliss. I mean, if we have documents that establish on their face a failure to comply, and we don't feel like we've got a tool to do anything about it, then we're almost in worse shape. So I don't know if we should be exploring legislation. If we've talked to other Act 37 counties to see how they're handling this. I mean, we can't be the only ones in this shape, but we know we have a problem, and yet we haven't been able to identify a way to address it. And I hear what you're saying. Those things will make it better, and it probably will help when you go back to the county the next year and say, see here, this is why we were concerned, because this is the same justification for this person. They have special knowledge for 3 or 4 years. You've had plenty of time to train somebody else with this special knowledge. So at some point, this is going to be an issue, et cetera. I mean, it gives you a tool that you don't currently have, but it doesn't necessarily translate into an improvement in the process unless we figure out some way to take advantage of that extra information.
Yeah, through the chair, I think LACERA is the most diligent 37X system on this issue. CalPERS a few years ago tried to tackle this issue and were not successful. They want to institute a policy very similar to LACERA's. They actually tried to do that before LACERA adopted its policy, and they couldn't get it through. It's, there's a lot of politics involved. There are, is this handicapping necessary public services? And so it's complicated, but so I think we're really kind of out there as the ones who are doing the most on that. In terms of managing legal risk, it's been the position of the legal division for quite some time, because we've been worried about this issue for many years in terms of the legal risk to LACERA, is that if LACERA does these audits, if we send them to the county and if we engage in the county with dialogue, we have protected the association because we don't have a statutory remedy. We don't have the ability to force the county to cure this. But if we are being diligent in trying to lead the employer to follow the mandates of eligibility standards that are in PEPRA, then we are providing a shield for LACERA.
Okay, great. Well, then, and that's a good point. I would suggest then, when there are future memos about this in the future, that sentence be included somewhere, because reading this without that background, one could conclude that LACERA knows that we're encouraging we're exposed to a risk, but we're not taking it very seriously. I mean, it could be interpreted that way. I think what you've just described, Steve, that you've looked at this, and if we do everything we are able to do, and we're diligent in overseeing it and bringing it to the plan sponsor's attention, and et cetera, that and we have no authority under the law to do more than that, then LACERA has met its legal obligation. And while it's still an issue, LACERA itself isn't. Our plan isn't at risk, and we're not risking it, et cetera. That we've done what we can do, and that will provide us an adequate defense if anybody should challenge. Just so that the memo itself doesn't leave an open question about the extent of the risk that to our organization by the failure to comply with things by a different organization.
Yeah, I would say we're doing a good job of mitigating risk, not perhaps, I don't think we'd go so far as to say we're eliminating risk, but I think
Okay,
we're
well,
strongly mitigating.
however you want to word it,
Yeah.
but something that puts that back in there so that it's clear to anybody reading this that we are comfortable with what that we're doing as much as we possibly can, and we believe that will mitigate any risk to our organization's, qualifications or standards, et cetera.
I just have a thought that popped into my head. So you're sharing the audit reports, which I think is great. And maybe you can incorporate some of this into the audit reports about how long this has been going on. I don't know if you do that already, or
Communications by audit.
yeah, would be super helpful. I mean, that's my concern when I started to read it, was protecting LACERA, because I'm a 36-year county employee. I know what the county can do and the crazy things that can happen. And so what you said at the end, I just, my breath. Okay, now I'm feeling like we are doing everything that we can. So sending those and talking about how much you are meeting with them, I think is so important. Thank you. Anybody else? You're good? Okay. So am I ready for a motion now? You're gonna accept and file? There you go, Amy.
Everybody's so excited to move this item, right?
I am.
I'll make the motion and appreciate staff's feedback. I recognize they're in a tough spot.
Absolutely.
Thank you.
Second.
Yeah, with the further instruction to staff, I second.
Thank you.
Okay. The motion was made by trustee Fessler, second by trustee Langton. Trustee Fessler?
Yes.
Trustee Langton?
Yes.
Okay. Trustee Me?
Yes.
Okay. Trustee Ginsburg?
Yes.
And Chair Martin?
Yes.
The motion passes unanimously.
Better up is Christina Logan and Christina Sun. No, Christina Logan is gone. Just Christina Sun.
Good morning again, Chair Martin. Okay. I'm now here to present on the Strategic Asset Allocation, or SAA audit. Begin with next slide, please. So the audit was performed for the investment office and received an overall satisfactory rating. We did not identify any exceptions in the areas reviewed. And the reason internal audit selected this engagement is that the strategic asset allocation process is one of the most critical components of LACERA's investment governance framework. Overall, internal audit concluded that the SAA process is well designed and operating effectively to support informed fiduciary decision-making and long-term strategic planning. Next slide, please. So maybe a little bit more in depth about why are we auditing strategic asset allocation. So given the importance of the SAA process and the BOI's anticipated approval of a new SAA in fiscal year 2027, internal audit included this audit in the plan. This audit also supports the LACERA Committee's oversight responsibility by providing independent assurance over a significant governance process that helps shape the fund's long-term investment strategy. Next slide, please. So before conducting this audit, I understood the SAA process at a high level. As part of the engagement, I reviewed the BOI materials, watched the prior year BOI meetings on YouTube, interviewed key stakeholders, and researched the process in greater depth. One thing I gained from the audit was a much greater appreciation for how much analysis, discussion, and trustee engagement goes into an SAA review. While the SAA process can appear complex, it really comes down to the key steps shown in this flowchart on this slide. The SAA process starts with gathering information such as capital market expectations, liability and liquidity needs. The investment office and Makita then perform modeling and analysis to evaluate different risk and return scenarios. Those results are discussed through board workshops and presentations, which ultimately lead to BOI approval of the strategic allocation, policy ranges, and benchmarks before updates are made to the investment policy statement. What stood out to me was how the process bring together the board, the investment office, and Makita over an extended period to evaluate trade-offs among risk, return, liquidity, and diversification. Next slide, please. So as we moved into field work, the question we wanted to answer was, does the SAA process provide the board with the governance, oversight, and information needed to make informed long-term strategic decisions? To answer that question, we focused primarily on the last SAA cycle, which took place in fiscal year 2024, covering the period July 2023 through June 2024. So it's important to know what the audit was not intended to do. We were not evaluating investment performance, determining whether a particular asset allocation recommendation was correct, or challenging the consultant's assumption and modeling. Instead, our focus was on the process itself. Specifically, we assessed the governance structure, board oversight, risk management practices, and the roles and responsibilities of the various stakeholders involved in the SAA review process. So now move to the audit results. Next slide, please. So to answer the question I posed earlier, we looked at the 5 key areas as shown in the table on this chart. And again, across all 5 areas, no exceptions were identified. More importantly, we observed a process that has continued to mature over time and incorporates several enhancements designed to support engaged and informed board decision-making. Those examples include an extended review timeline over 12 months, trustee reviews, interviews and survey feedbacks, climate-related scenario and discussions, and continued refinement of the functional asset category framework. Taken together, these enhancements provide trustees with additional opportunities to understand assumptions, evaluate alternatives, and participate in meaningful discussions through the review cycle. Based on the work performed, we concluded that the SAA process is operating effectively and supports sound governance and fiduciary oversight. This concludes my presentation. I would like to thank the Investment Office for their cooperation throughout the audit. I'd be happy to take any questions. No.
Great audit.
Oh, thank you.
I can motion to move to file.
So moved.
Thank you.
Who was the second? Oh, okay. Motion made by trustee Langton and second by trustee Fessler. Trustee Fessler?
Yes.
Okay, trustee Langton? Okay, trustee Me?
Yes.
Trustee Ginsburg?
Yes.
And Chair Martin?
Yes.
The motion passes unanimously.
Thank you. Okay, before we move to the next item, we want to pull reports, just so you know, on D. No, I know we have 2 presentations, A and B. No? I know I am. I
Okay.
just want to tell them that we need D and G pulled. Can I do it? Okay, thank you. All right, so business continuity. Christian.
Yes.
Thank you.
Good morning, Chair and trustees. I think I'll just go ahead and wait. Can y'all hear me? Okay, fantastic. So hello, everybody. My name is Christian Velasco. I was the auditor, or actually just, I guess, the advisory, preparing all of the work for the advisory engagement for business continuity. And so before we move on to the next slide, what I would like to do is just provide a couple of top bullet point items before we proceed further into our engagement results. Next slide, please. So one of the first things that I actually wanted to cover is the goal of business continuity is to enable an organization to restore critical business processes after a disruption has been declared. Now, this actually feeds into organizational resilience. This is a key component to organizational resilience. And I just wanted to communicate that this was just one part. Organizational resilience is actually a bigger organizational risk. Think vendor management, right? When you think about organizational risk. The other concept that I wanted to go over is during a disruptive event, that would be the STARS, that says triggering event. That could be an earthquake or a cybersecurity event, that there are actually 3 phases that are undertaken as you go through a disruptive event. That would be incident response, crisis management, and business continuity. Now, the best way to kind of describe these 3 items is that incident response is going to have emergency prevention, emergency preparedness, emergency response, and emergency recovery. Crisis management is going to be just the handling of unexpected events, rapid decision-making, communication and mitigation. Some of the deliverables and artifacts that we would see in something like this would be incident-specific crisis response plans. And then the third phase is going to be business continuity. This is ensuring critical functions, risk identification, recovery priorities, and then developing contingency plans. And so we go and we present this graphic to show you that, as you can see, each and every single one of these phases, they're not siloed. If you take a look at the incident response and then crisis management, you see an overlap with a triggering event. And then you actually see an overlap between crisis management and business continuity. And there is a point where all 3 phases have to actually work in tandem with one another. This all just goes to say that collaboration is extremely important when it comes to business continuity. Just making sure that all the ducks are in a row and that everybody is on the same page and that the governance structure is properly communicated. This is the part that I actually want to start with before we start with the advisory engagement results. Does anybody have any questions so far? Fantastic. We'll move to the next slide, please. So the responsible division for this particular process is going to be administrative services, and this was an advisory engagement. So what we did was we actually collaborated with administrative services to provide formal assessments and advice for LACERA's governance, risk management, control processes without internal audit assuming management responsibility. Okay, and so what we'll do is we'll move on to the next slide. So here, what we have is our objective, and our objective was to assess LACERA's business continuity program by evaluating alignment with the leading industry frameworks. And so when it came to us doing benchmarking or a gap analysis of sorts, what we did was we reached out to ISO, the International Standards Organization, the BCI, the Business Continuity Institute, the Disaster Recovery Institute International, and then also the Institute of Internal Auditors, in which they actually provided a global technology audit guide to help us actually perform a business continuity engagement. And as a result, we went and we amalgamated these pieces, took the parts that were actual value adds, but then there was actually a common overlap between all of this prevailing guidance. And the prevailing guidance happened to be governance, oversight, and program management, business continuity risk assessment and mitigation, business impact analysis, business recovery and continuity strategies, and the deployment, verification, and maintenance of business continuity and the program capabilities. So just as a note, disaster recovery was actually scoped out for this particular engagement. It was actually approved that an advisory engagement, it was approved in November of 2025, that an advisory engagement would be retained with Weaver and Tidwell to focus just on this specific area. Does anybody have any questions so far with this engagement? Or the objective and scope, rather? Fantastic. Next slide. So I think the biggest takeaway here is that the business continuity plan has key foundational pieces and is continuing to mature. And so as we are working through our entire engagement, we noted that the business continuity unit is knowledgeable and well regarded across LACERA. As an example, one of the people involved in the unit actually has a certification from the DRI International in which he actually has to do 80 hours every 2 years to maintain this designation. In addition, a value add is that MHA Consultants, they are a consultancy firm that specializes just in business continuity and disaster recovery. And they are there throughout the entire process, not only for the business impact analysis that LACERA performs, but for the risk assessment. And they're also there for the tabletop exercises. And they're also there for various ad hoc reporting or ad hoc items that the business continuity unit might actually need. And the other part that we would like to pay attention to is that the business continuity unit actually provides regular communication to all LACERA staff. And so they provide communication through the tabletop exercises, just through OnSolve. OnSolve is our emergency notification system, and we make sure that all the contact information is all updated and appropriate. So when something actually does happen, we can communicate to them and we can ensure their safety. Some of the other areas is going to be building safety training and fire drills, in which we actually had one about 3 weeks ago and were rewarded with an ice cream cookie. So win-win. And so after the scope period for this particular advisory engagement was January 31st of 2025. But we noticed that there were a lot of improvements that we're continuing to make. To steal Ricky's analogy, changing tires in a moving car, certain instances, they are pretty much on the third tire. And so what we noticed was that there was enhanced divisional engagement to identifying and monitoring critical processes during the annual business impact analysis update, and that there is actually increased collaboration with systems and information security to assess recovery time and recovery point objectives. And just as a heads up, recovery time just means the duration of time that is actually required for a system to go back up after it's been disrupted. The recovery point objective that we actually mentioned has to do with the amount of data that can actually be recovered prior to a disruption. And so the part that I really do like about the enhancements that was made was that it evolved from a BCP plan to a playbook. And the playbook actually outlined various steps for the steps of recovery. And it actually also breaks it down by loss of technology, loss of building, and loss of internal, external dependencies. That was a value add that wasn't during the scope period that we thought definitely moved the needle for the business continuity process. Does anybody have any questions so far? Okay, great. So as we moved through our advisory engagement, next slide, please, I apologize. We actually do have enhancements. As we were looking through everything, we did notice we just noticed a theme in terms of what we would actually want to see as an enhancement to the business continuity. Some of them is going to be the business continuity charter for all the work that they've actually done from the scope period up until May 31st, to be able to champion those wins, the risk assessments, the business impact analyses, having those included, evaluating the roles and responsibilities, not just with the alert team and the alert team, but also just to ensure that there is a governance structure behind those and what is required and who is required to review. Some of the other areas is just also being able to establish a process to track and document and monitor outstanding findings. So currently the tabletop exercises do have action items, but we want to recommend that if there's any action items during the risk assessment process or the business impact analysis process, that they kind of go through the same rigmarole. And so before we actually move to the next slide, I would like to actually go and say thank you to Admin Services. Their collaboration has been instrumental in this engagement. Couldn't have done it without them, obviously. And I would like to actually open the floor for any questions you guys might have. Next slide, please.
Like no questions.
I do have one just very general comment. No, it's
Sure.
not a question.
No,
I
understandable.
just want to say, I read all this stuff at home on my little iPad.
Sure.
And I didn't have my glasses on and they all have this last slide with the questions and this little
Right.
Pile of question marks.
Yeah.
And I had to squint quite a bit to figure out what the heck these things were. They looked like a bunch of little worms that were popped up on my screen. So just to lighten the mood a little bit, it's an interesting slide.
I will bet you that was probably not the intent. We could maybe turn them into just standing up question marks. Okay. No, I appreciate the feedback. Thank you.
Okay. So motion to accept and file. Thank you.
Motion made by Ms. Trustee Ginsburg, second by Trustee Langton. Trustee Fessler?
Yes.
Okay. Trustee Langton?
Yes.
Trustee Me?
Yes.
Trustee Ginsburg?
Yeah.
Chair Martin?
Yes.
And the motion passes unanimously.
I appreciate all of your time. Thank you.
Thank you. All right. Moving on to reports. Ms. Collins, building fiscal year 2027 audit plan.
Okay, good morning again. At the August Acre meeting, I'll bring the Acre Committee the fiscal year 2027 audit plan for approval. So the purpose of this presentation is serving sort of a preview of the building of that audit plan. And I'll go over our risk assessment and planning process and methodology that I'll be using to develop that audit plan for fiscal year 27. Next slide. So as indicated here, one of the most important roles of the Acre Committee is the approval of a risk-based audit plan. So as stated in your charter, as well as in accordance with the IIA standards. Next slide. Now, to develop the audit plan, as illustrated here, it's an audit plan cycle. So it begins with the identity of our audit universe. These are all of those possible areas that we can audit. So we conduct informational meetings with management. We also look at our prior audit universe and make updates on any areas that have changed or if there are new processes. And we also identify significant changes. So that's in order for us to get a well-rounded and a complete audit universe. So next is to evaluate. This is where that risk assessment comes into play. We're looking at all of those audit areas, and then we're assigning a risk rating. That way we can identify those that are of high priority and have the highest risk. We're also looking at any trends, and we're discussing these risks with the executive office as well as management. The next area is the prioritization of the audit areas. This is where I'm determining our required audit projects along with those high risk areas that will be included in the audit plan. Most importantly is also getting the Acre input. So you'll be receiving a survey within next month to get your input on areas of concern and risk. Next is the strategy. And this is where I'll be going through looking at these audit areas, identifying the type of resources that will be needed in order to conduct the audits, whether it's going to be conducted internally or externally. I'm looking at budget, because if it's external, there's also costs associated with it by using a consultant. I'm also looking at the timing, other areas, and operational needs that we have within internal audit. So that's all part of the strategy to develop that proposed audit plan for you. And then lastly is the execution. I'll bring the audit plan to the Acre Committee at the August meeting for approval. And then we will be conducting our audits. And at each meeting, I'll bring an update on the status and progress of the completion of the audit plan. Next slide. Now, as I mentioned, the risk assessment process is one of those key areas of the audit plan cycle. So each item in the audit universe is rated on a 3-category inherent risk, operational, organizational, and emerging risk. I'm using inherent risk, which is risk before considering controls. This keeps assessment objective and consistent, prioritizing audit areas by their underlying significance while leaving the testing of control effectiveness when we perform the actual audit. The value of this approach is consistency. Rather than evaluating areas ad hoc, we apply the same 3 risk categories and the same rating methodology to every item in the audit universe. This systemic, uniform treatment means each area is assessed on equal footing, and it removes subjectivity unless the most significant audit areas surface for inclusion in the plan. Next slide. So for fiscal year 27, some of the highlights, because I would like to make some enhancements to the audit plan and the framework. I'm looking at a plan with a 6-month horizon or a 6-month window. And I will add risk assessed areas throughout the year so the plan stays current I believe this approach recognizes that priority, risk, and operational needs change unexpectedly throughout the year. And I'm also planning to have audit teams rather than assigning one auditor to each audit, which we've done in the past. This approach should help complete audits more efficiently, support tighter timelines, and improve supervisory oversight. I also plan to restructure the audit plan to define audit timing and resources to provide more transparency to the ACRE committee. And lastly is allocating some time investing in the skills and the professional development of our audit team. I'm going to dedicate time in the audit plan for training, particularly in emerging risk areas such as technology and AI. This will help ensure our team is prepared to audit these areas effectively and use new tools responsibly to strengthen our audit work. And also, as I went through the discussion earlier, the EQA, there will also be time set aside for the EQA because it does require time from the internal audit team. There is not only the coordination of all of the different areas that assessor needs to do, but from an internal audit, we are going to need to work with the assessor, providing information to them, going through our work papers and so forth. And also one area is that, especially during the first quarter of next fiscal year, we will be spending some time with an internal audit, specifically looking at our own operational processes in order to make some enhancements and changes. And that's one of the reasons why I feel that EQA is going to be very beneficial to us, because we'll be able to incorporate those recommendations into the changes that we make. Next slide. So what's next? Internal audit will be holding risk discussions with management and leadership. I'll be sending the ACRE committee a survey to get your perspective on areas of concern. We'll be completing the risk rating and use it to focus on the audits that matter the most, and draft the proposed fiscal year 2027 audit plan and bring it to the committee at the August meeting for approval. And this concludes my overview of the development of the audit plan. Are there any questions?
Great audit plan. Really thinking, what stood out to me is the audit teams.
Mhm.
It just makes it so much easier when you've got more people that are aware of the audit than less.
Mhm.
And so I want to congratulate you. That was a good thing to do. And I think the audits will get done quicker as well.
Yeah,
So
that's
I
the
think,
plan.
but your overall plan is excellent. Thank you.
Thank you.
Oh, no, go ahead.
I was pointing
Oh, thank you, thank you,
Sorry, your
thank you.
hand's up. Yeah.
First of all, I think that the enhancements that you're suggesting, both to the risk assessment and the audit plan itself, are really good enhancements, and appreciate the path that you're going here. I just want to focus on, question on one area here. So when you say that a 6-month horizon, are you talking about putting together a 6-month audit plan and then adjusting it throughout the remainder of the fiscal year?
Yeah,
that
it'll
what you're-
be, it'll be a 6-month audit plan, but also I'll provide what are the other audit areas that are not included within that 6 months, because I would like the committee to know what are those, what are our high risk areas that we need to consider for our audits, and also report out on how I will add those into our audit plan. I see it like, basketball game, you have your 5 or 6 players on the bench. They're your main players you're gonna use for the game. And then as the game changes, you substitute or you add in other players. And so that's the way I'm seeing it, where we start out 6 months, then as we're proceeding and going through the audit plan, I will add on additional audit areas. And as I said, it will be full transparency. So I want to discuss that and bring that to the ACRE's attention as well. So you're aware of what are we working on and the timing of it.
So I think that's a great idea. It allows you to be more nimble as an internal audit team, allows you to address the highest risk of the organization and what's most important to LACERA. So I agree with that. So I would suggest, though, for the committee to consider is that while the audit plan is brought forward and it's a risk-based plan, that at the same time that you're bringing the audit plan forward, to also have an agenda item that incorporates the risk and the risk assessment as well, so that you understand what are the current risks of the organization, what is the plan addressing, more importantly, what it is not addressing, right? And then also, as the audit plan is updated throughout the year, bring back that risk assessment at the same time you're suggesting changes for the audit plan. That way the committee can really get a broader picture, and then and make sure that we're addressing, you know, the right risks, and determining that the resources are being applied appropriately and things like that. So I would suggest that the committee, you know, consider that as part of this process.
Yeah, I think we will, unless there's somebody that objects to it. I think it's a great idea.
Yeah, definitely.
It keeps us up to date and tracking, especially on the risks.
Yeah, and we'll have a broader discussion about risk of the organization at that time too.
Yeah, thank you.
Thank you.
Christian, are you there again? You're up again. Christina, Christian, boy.
There's a lot of Christina versus Christian.
Chris.
Oh, Mr. Jensen? Oh, I thought you had a question.
Oh, yeah, your hand's up. Yeah, he took it down.
Oh, no, it's no problem. Okay. No, that's okay. Yes, so as you well know, I'm Christian Velasco. Today, we will actually be discussing the analysis of human resources employee separation data. Let's go and let's move on to the next slide. And so when it came to the purpose, objective, and scope, this was primarily in response to a March of 2025 ACRE committee request on employee separations and exit data. This also actually is in alignment with the strategic goal of investing in people, and then also supports Lewis's focus on building a culture of excellence. What our objective here was to go and gain an understanding of the current exit interview process, assess the current data that is available from human resources, and then just review best practices and workforce statistics that are out there and available. And so our current scope period that we're going to be looking at is going to be from fiscal year ending of March of 2021, or sorry, fiscal year ending of 2021 to March 31st of 2026. Just to clarify, this is a value-added engagement. This does not provide any assurance or any advisory, so no assurance whatsoever. This is really just a way to kind of help, assist, and just take our necessary steps for internal audit to be a trusted advisor to other divisions. Next slide, please. So we'll go and we will actually start big and then work our way smaller. So what we did was we wanted to do an apples to apples comparison. So from July 1st to June 30th of 2025, we had 441 filled positions and then 21 employee separations. And that arrived fiscal year end of 2025 to be 4.7%. What we actually used as just a basis of comparison is going to be the California Department of Human Resources 2023 annual census data. The rationale being is because when we actually looked around to go and find any Los Angeles specific data, there was inferences, but there wasn't anything specific where we could actually vet the data. So this was the closest thing that we could actually find to vet data and find a comparable measure. So I think the key takeaway here is going to be that the overall attrition for LACERA for 2025 is 4.7%. And the statewide benchmark is actually rounded up. It's actually around 7.6, but it's actually around 8%. And so what we'll do is we'll actually go into the details on a year-by-year basis and the various categories. Does anybody have any questions thus far with the numbers used or the attrition rate? Fantastic. Can we move to the next slide? So what we have here is 3 categories, and this is also consistent with the Cal HR census data. They break it down between retirement, involuntary separations, and voluntary separations. And so what we have here is just various percentages of the aggregate amount of separations that were done from fiscal year end of 2021 to March 31st of 2026. So in that period, it was 153 separations. So that you're seeing the aggregate totals here over the last 5 years. So LACERA was at 45%, whereas CalHR was at 44%. Involuntary was at 17%, whereas CalHR was at 10%. And then the voluntary separations part, LACERA was at 38% versus 46% via CalHR. We also have the year-over-year comparisons of retirement, involuntary, and voluntary separations. And I just wanted to double check and see if anybody has any questions thus far. Okay. So what we'll do is we'll move to the next slide, and I would like to pass this off to Jessica Baxter.
Good morning, Chair. Good morning, everybody. When we started looking at this data, one of the things that popped up on my radar very quickly is we have a very low attrition rate, right? So that's a great thing, but we also need to focus on the data, right? And get a little more interest in our data. We've did our cultural survey and our focus groups last year, and we're about to redo them in the January timeframe coming up. But as part of that strategy, we're also going to focus on doing what's called stay surveys, right? And really focus on why people want to stay, so we can correct the issues before they leave, right? I mean, it costs us too much money to recruit, right? To bring somebody on, to train people and bring them up to speed. Where if we can adjust fire where needed to meet those concerns, let's do that and try to be more effective. So we're really focused on framing that discussion and going forward. And then more importantly, we're still going to do exit surveys. We're still going to look at them and see what data is out there, but really focusing more on stay and reason why people want to be engaged, and hopefully driving employee engagement through our cultural survey, through our focus groups, and then now with this additional stay surveys. And these surveys are typical 3 to 5 questions, very short speed. Is something that Department of Homeland Security implemented back in 2022, really focusing on addressing some of the issues that they had down at the border with some of their staffs there. And it was very effective during that period. So we're gonna do a lot of the same things here. And I'll open up to any questions if anybody has any.
Yeah, next slide, please. Sorry. I'm sorry.
A warm slide.
Yeah.
Go ahead, trustee. Me.
Hi, thank you for the presentation. This is a piece of information on the memo, not on the slides. It says, human resource officer or separating employee the opportunity to do either a survey or exit interview. However, the only 20% of people participate in that. So I'd like to know what's the industry, benchmark in participation in exit interview. Is 20% the norm or low?
The jury is out. I would say probably going and determining whether that is an appropriate high or an appropriate low is a very organization specific item. As an example, when we were doing exit separation data for public sector compared to private sector, for me, I used to be at a public accounting firm, and our attrition rate is 30% a year. And you would get a whole bunch of exit interviews coming in just with a lot of people with access to grind. And so I would say it's extremely difficult to go and determine what would be a reasonable range for people to go and participate in these. And so when it comes down to it, I think when we take a look at the attrition rate, we also have to kind of consider it in the lens of all of the other ancillary information that we do to assess our culture. And I can give you kind of just that framework, but to say that there's a benchmark.
What about pension plans like CalPERS, and wouldn't that be a acceptable benchmark? I mean, if we were really looking for something.
Right.
Yeah.
For the response rates back, it was very difficult for me to ascertain that information.
They wouldn't give it to you at CalPERS?
We went in, we just took a look at all the slides information in regards to separations, but it was hard to get that statistic of what is a reasonable return rate of exit interviews that we send out versus what we get back. But we can go and definitely pursue it a little bit further and take a look into it.
Right. The reason I'm asking, without comparing with other organizations, right? My assessment is that 20% is really low. And I think this is a really, really valuable exercise that we should do, exit interview, because that's the moment that when people are most honest and willing to give you the true opinions about what they think of the organization based on their experience, because they're exiting, they don't have any interest that would worry them not being honest. So I think it's a really important things that we do, and then try make the participation rate, so we can get the value of people before they leave and get the knowledge, the feedback, how we can improve in this organization, right? And from the employee perspective, I don't see what the reason why they wouldn't participate in it providing that if they think their input are being valued, right? So for me, if I don't think my input is being valued, I wouldn't waste my time. But if I think my input is being appreciated, valued, and taken into account, I would be more than happy to give the feedback to help the organization to get a better place. So that's my feedback. I think in whatever way, maybe we should try to get that participation rate increase, maybe give like a gift card or something, and show people that we take it seriously and we take the input, we value those inputs. That's my feedback.
Trustee May, and the board, what I would say is the exit survey number does not surprise me, and separate exit interviews from exit surveys. So exit surveys typically are sent after you leave the office at a period of time. The problem is a lot of people have moved on and we're into a new environment, right? I know we all get mail still, but how many people, I know where I used to live, I had one of those mailboxes. It would be full every time I'd go get it, right? It's just not something that's new. We do need to improve exit interviews. Yeah, that is something we do. I agree, and we're working with HR to develop a better process to make sure everybody has the opportunity to complete it as we move forward, for sure.
You can do it before they leave, before the last day of the organization, right? So don't take the personal time after they left. So.
Correct.
Yeah, I have a question just to make sure I understand. It says that all separating employees were provided the opportunity. Does that include the people who were involuntarily separated as well?
No, it does not include our involuntary separated employees.
So I would figure they'd have a lot to say.
They would have a lot. Yes, they would typically have a lot to say.
Okay, but it also does include folks who are retired.
Correct. Because I want to know from a data perspective, right? I want to know why they retired, not just because they were eligible. If they felt like, hey, now I want to retire now when I could have retired a year from now, that's probably important to us to look at.
Okay, and I understand, and that makes sense. In response to Trustee Mee, and I agree with you that you have to feel like it's a worthwhile exercise to participate in it. But I do think that when you implement the stay process and the stay interviews and surveys and things, that will communicate to existing employees that we do value this input. And that's kind of an indirect way. Maybe we won't need to go to gift cards, but we will have established a more of a culture or a communication of the value that we put on receiving that kind of input from our employees. And it will indirectly improve the level of participation in the exit interview and survey process as well. I think that's a really valuable, it's valuable for all of the reasons you've already indicated, but I think it could indirectly improve this participation level.
I agree 100%.
Thank you for your presentation.
Thank you, and I appreciate all of your feedback.
Thank you. Now we can pull our extra report. So fiscal year ending 2026 audit plan status report. Do we have Nathan? Nathan's coming up. Good to see you. Trustee Mee, is there anything you just want to see the presentation, or do you have any questions for the team?
First, I thought it's a year-end, report is a really important one that we make a plan for a whole year audit plan, and then now we conclude in a year to see where we're at, right? So first of all, I think the report itself is important to present. Second thing is I can ask at the end, I don't trust my memory too much, but I have the impression that the completion rate last year was much higher than 68%. I would like to hear some feedback on, the progress this year and then the reasoning, how we're doing.
And I just want to start out by saying this is our audit plan status report, but this is not our year-end audit plan status report that we will be bringing to you at the August committee after the June 30 year end. And those will be our final numbers. These are not our final numbers. These are our numbers as of June 18th only.
Oh, I see. The title is really misleading when it say fiscal year end 2026. I thought this concluding the whole year. So
No, it's
that's
with
why.
in regards to the fiscal year and internal audit plan status report.
Yeah.
I apologize. I will work on the title to remove that confusion for you.
Okay, that case is okay. I'll wait until the real closing fiscal year end report to see the status. You can ignore my comment for now.
Yeah, this is a status report, so it's the report that Nate brings to each meeting to give an update to the ACRE committee on the progress we're making on the audit plan.
Do we want to continue with the presentation or?
I'm okay. I'll wait for the next one that when we the report on the status for the year close. The book
Yeah,
close.
we'll wait, right?
Thank
Okay.
you.
That'll be in August.
Yeah. Thank you very much.
I nailed it.
You did.
Okay. The next item we pulled was ethics hotline status report.
Okay. Are there specific questions based on the reporting from the previous ACRE meeting? There have been one case that's been closed and one that has been added. And if there are any questions, I can address those at this time.
Trustee Me, go ahead.
Yes, I do have a comment on this. Just continue to emphasize the point that we just talked about earlier, how we want to make staff feel like their input appreciated and valued, right? Including this report. Like people would only use this report if they think, the management team is taking every report seriously, right? So I think I remember from last meeting discussion, we look at this report, say, when we close the item, we should have a comment to say that what we do was a conclusion, any action item from come out from it. So I remember that it's discussion from the board, and then also I think our consultant, Mr. Jensen, also made that comment, but I don't see that, being implemented in this report. So I thought follow up on that.
Okay, yes, that was part of the discussion, and there will be additional changes to reporting. Keep in mind that the ethics and compliance program is going to be established. The ethics hotline administration is going to be moving over to ethics and compliance. And at that time, there will be some re-engineering of the process as well as some reporting. Allison can give you some more details on that.
Yes, the hotline will be under the CECO's purview, and wanted to give you an update on that informally since it's not on the agenda. It was a packed agenda today, so we bumped our item to August. That being said, we had 7 ethics and compliance recruiters that responded to our March issued RFP. Legal and HR rated the candidates. We narrowed it down to 2, which we interviewed. We selected Concilium. They are a recruiter devoted specifically to compliance. The contract was executed at the beginning of June, and we've been meeting weekly with them ever since. We have a meeting this afternoon. Completed a job posting along with 5 experience and behavioral questions for candidates to respond to, along with submitting their CVs and other supporting documents. And I've buried the lead. The posting went live this morning. So that's where we are with that. And then the initial round of interviews will be conducted by legal HR exec. Then it will go to the ad hoc committee, which, as you know, we've got 2 from the ACRE, trustees Kehoe and Fessler, 1 from the BOI, trustee Langton, and then trustee Pantoja from the BOR. So, and then under the next step would be under the ACRE charters and ethics and compliance program charter, Lewis will make the final selection and then bring that selection to the ACRE committee and boards. So our goal, emphasis on goal, is to seat the CECO before October. So coming back to that, then the ethics and compliance, or the ethics hotline, will fall under the purview of the CECO and the ethics and compliance office. And those reports will be elevated to provide more detail, including the response.
Thank you.
Thank you. So Alicia?
I think Larry had a question.
Well,
Go ahead.
I do, but not on this item. I think
Okay.
that was a good presentation there. The last item moved so quickly. I'm sorry that, with regards to the audit plan
Yeah,
itself, right, and the status report there. If I could just back up onto that one,
Sure.
because they're on your slide there, you had the status of significant projects there. And what I wanted to do is, earlier I asked about the impact to the plan with regards to bringing on your external quality assurance review, the EQA. And then also it looks like you're proposing to defer one of the audits in the plan here. The standards also require that they bring that forward to the committee for approval, any modifications to the plan. So I want to make sure Alicia has an opportunity to do that for today.
Yeah, so looking at the audit plan, maybe I should at least provide an update on staffing as well, because it sort of ties in with the completion of the audit plan. Christina Logan, which was one of our principal internal auditors, she resigned last week. Her last day was Thursday. So in internal audit, we are down 2 principal positions, which is a significant, it does impact the work that we do, because principals are the ones that are driving audits, reviewing the work papers, making sure that they stay on track and so forth. With that in mind, is one of the reasons why we have indicated that one of those audits, the DR review, that will be postponed. It's not going to be eliminated, but it will be postponed to next fiscal year when we have the needed resources in place in order to handle that type of engagement. It is done by an outside or external auditor. However, it does require internal audit resources for to work with the external auditor on that type of engagement. In comparison to the other audits, because we do have about, I think when I was looking through it, we have about 8 more audits that are to be completed. 3 of those will be completed by external auditors, so that's less of our resources. But the other 5, they're in various stages. Most of them, were already in the planning stages. I don't want to stop the audits. What may occur is that they're going to be a bit delayed because I don't have the principals to review all the work papers and keep, moving the audits along. I only have so much time in my 8 hours, so I can't do everything. I've been doing the principal vacancy position that I was in before. Plans going forward are to fill that position. I've already have started discussions with our HR department to start the recruitment process for our principal position. It is going to take about 3 months in order to fill it. So in that time, I am planning to appoint interim principal positions from our senior auditor team. We're going to be going through a full process, including an interview, review of their qualifications and a readiness in order to take on the roles of principal internal auditors. And that way I will have that coverage. But again, there are going to need to be some changes with the timeliness of some of these audits too.
Yeah. We did complete another audit since we created these slides. So we actually have 1 more completed.
Yeah.
So we're at 72%.
You're doing great work.
68.
You're doing great work.
And we're on track. I do anticipate that at least half of these audits, by the time we're coming back in August, they will be completed. And if they're not completed, we will continue to proceed with finishing up these audits, and they'll be reported out at the future ACRE meetings.
No more questions?
No, not a question, but just good. I recognize that, it's going to impact your audit plan with regards to your vacancies, and just make sure we keep the committee informed about that. Right. And then the status of these, and to address Trustee Mai's question with regards to the status of those, I think the committee just needs to recognize that it's going to impact that plan. Yes. And when we hear that next report out, it's great if you can complete all of these, high five, but just recognize that there is a significant impact as you level this out, because there's probably likely some internal promotional opportunities, things like that are going to play out and may take several months to address. And so just make sure the committee is aware of that.
Yeah, that's a good point, because even for fiscal year 27 audit plan, especially during that first quarter, there's going to be a lot of transition, a lot of internal work that's going to be done. So that's part of the allocation of internal audit resources as well. And in addition to completing these audits. So.
Okay. Thank you.
Thank you.
So we're going to move on to your verbal reports.
Oh, the first one I already gave it was
Yeah.
on the staffing. The other one, there aren't any other audits that are not directly under the purview of internal audit that are occurring.
Okay. Thank you.
Mhm.
Mr. Larry? Okay. Items for staff review?
None at this time.
None at this time, okay. Items for future agenda? None at this time. Oh, yes.
I think this has been mentioned in the past, but I would appreciate if we can get it on a future agenda, and maybe the August one is going to be too soon or it's otherwise real busy. But as a trustee, my ability to get prepared for these meetings and the Board of Retirement meetings is constrained by the fact that I can't print any documents that are in the packet. There are some kind of restrictions on my access to the information. I can't even print the agenda.
Oh.
And I'm not looking to have the opportunity to print documents that are confidential, that are covered by closed session restrictions or anything like that. But everything that we've looked at today is a public record, as far as I know. And any member of the public, even people who don't live in this community, have a legal right to have access to those documents. I'm mystified by whatever thought process is behind the decision to restrict trustees from having that same access. And so I'd appreciate either a report about how this came about. And the other thing, as I understand it, if I made a request to the executive office, I could have printed copies of everything delivered to my house. So I'm confused as to, and I don't want to do that. There's no point to that. I don't need the whole packet. Number one, and number two, to put LACERA to the cost of having somebody drive to Long Beach with a packet of documents seems like a big waste. But at the same time, I can't print anything. So I can't comment. I can't write down my own comments. I can't bring with me 2 or 3 pages that I may want to emphasize on where I've noted my own comments. And so I'd like for a presentation on what is behind that decision or that rule, and or an update on the fact that it's been fixed. I don't, if that's what the rule needs to be, then I'd like to understand why trustees are not trusted, if you will, to print things. And otherwise, if the problem gets fixed and we are given that access, then just maybe a notification to all the trustees on both boards that they now have that ability.
Okay, I can follow up on that.
Thank you.
Can
Appreciate it.
give you some information.
Yeah, I just have a question also on that. Is the whole packet, other than obviously the confidential stuff, on the website?
Yes, it is.
Yeah, so we
It's
should
posted
be
to
able
the
to print
website.
from the posting on the website. I know this, you have to do electronic notes on the NASDAQ board advantage, but it's posted on the website at LACERA.
Okay, well, I've looked before and maybe I didn't look closely enough. I saw that the agenda was posted, but I didn't see that the
The whole
attachments.
packet.
Okay.
I mean,
Yeah, the entire packet.
Yeah.
And I believe Linda sends out an email to a notification of the posting. It's for internal audit. It's always the week before the actual meeting. And so our deadline for this one was the 18th. I think she pushed it out on the 18th, Perla, or yeah.
But she sends us a notification that it's on Board Vantage. I didn't, that's my bad. I didn't follow
It's
through
also
and
on the
look on it.
website.
Okay.
Yeah.
But I think, okay, I appreciate that. I'll use that from now on. But I think there's still
Yes, a
like a
question.
philosophical issue
Okay.
as to why we're trusted to manage the organization, but we aren't trusted to have we have limited access to documents that it makes no sense to me.
Okay.
Thank you.
Again, bye.
I just have one thing. It's like, if we're gonna go to the website, then why is it on Board Advantage. I know to
Do
make
you?
notes, but it just doesn't make sense that we can't print from Board Advantage or one meeting, whatever we have. I agree with that.
Okay,
Okay.
we can provide some more information on that.
Good of the order? Oops, good of the order? All right, so we're adjourned. Thank you.
Thank
At
you.
11:25.
Thank you all.
Recording stopped.